The dollar's weakness across the board has finally affected oil, which managed to some ground. However, its growth was largely due to the decision of the United States. Washington pledged to provide Israel with both financial and military aid, thus increasing the risk of further escalation of the Palestinian-Israeli conflict. This would inevitably affect the world's top oil-producing region and lead to supply disruptions, which is currently the key driving factor pushing up oil prices. If tensions intensify, Brent crude may shortly rise above $90 per barrel. In the meantime, the benchmark is trying to consolidate above the level of $86 per barrel. After all, uncertainty over global demand persists. Data shows manufacturing activity in the world's two largest economies, the United States and China, expanding at a sluggish pace. That's why Saudi Arabia intends to extend its voluntary oil output cut over 1 million barrels per day. Meanwhile, gold is standing still despite escalating geopolitical tensions, which are supposed to induce risk aversion. After all, gold is considered to be a traditional safe haven asset. It looks like some delayed reaction. In the short term, the yellow metal will most likely rise to $2,000 per troy ounce unless tensions in the Middle East ease. Also, gold prices may be supported by a weaker dollar across the board. The Fed's latest policy decision and post-meeting statement signaled that further rate hikes might be off the table. Moreover, policymakers recognized that the effect of the previous rate hikes had yet to be fully felt in the economy, and today's macroeconomic calendar includes US jobs data, which will help investors assess the state of the economy. According to estimates, the labor market is slowly cooling. Thus, the dollar may come under even more pressure. Speaking of the ruble, the situation remains unchanged. It's all about the lack of understanding of the real effect of new sanctions imposed by the West countries. They are supposed to cause serious harm to the economy, but it's still unclear what kind of harm. At first glance, the new package of sanctions from the United States will have no effect. Perhaps the upcoming restrictions from the European Union will be more clear, so the market is in a wait-and-see mode. If the next batch of sanctions proves ineffective, the Russian currency may well try to go below 90 rubles per dollar. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.